With me now is Alan Futerman. He is adjunct professor of institutional economics at UCL Argentina in Argentina. Actually, you are discussing cryptocurrencies and CBDCs, central bank digital currencies. And you have been saying that the appearance of cryptocurrency led central banks first to ignore them, then to mock them, later on to fight them, like Libra, and now they're trying to embrace them. Why did central banks feel so much horror in front of these proposals?
Well, they decided to reject them first because they were a menace for their monopoly on money. So basically what they saw later is that they had very interesting features that they could use in order to further their monetary policies. And so that is why they created pilots and research projects and all sorts of developments of these central bank digital currencies, which actually are liabilities of the central bank and that allow on a retail level for consumers and businesses to have accounts directly in the central bank.
Well, the future is digital, so it might seem natural that the central banks say we want to go digital as well. However, they are already, of course, the banking system is digital for a long time. Central bank digital currencies, are they sort of a new cryptocurrency?
That could be an option. There are many different types of CBDCs. So, in other words, CBDCs could be created differently. For instance, they could be wholesale, just for financial institutions and banks, or retail. They could be based on blockchain technology or traditional ledger technology as banks have today or central banks have. They could involve different types of private financial institutional participation, like for example intermediated CBDCs, or they could just be CBDCs run directly by the central bank without intermediation. So it's not necessarily the case that a CBDC will be a cryptocurrency.
But there are concrete proposals. Actually, for example, the Bank of England has one that is rather developed already. The European Central Bank is at least thinking about quite detailed proposal. The Fed even now is suggesting that it might go into issuing its own CBDC. And usually the argument is, well, the physical currency is disappearing, so we need to replace it by something. It's basically almost the same. However, it's much more a CBDC, isn't it?
Absolutely, yes. Although cryptocurrencies and CBDCs are both digital, and this is why they are often confused, the truth is that since the central bank issues and controls the CBDC directly, that is, people have an account in the central bank, they would have the ability to pursue certain policies that could severely harm individual rights and particularly financial privacy and freedom ultimately in its most extreme cases. For example, social credit policies, restrictions on the amount or quantity of transactions depending on
negative interest rates.
Right, more effective negative interest rates policies. There are literally tens of different measures that could be implemented with CBDCs that would severely affect the individual's control on its own property, right, in the form of money. So that is quite a problem, I would say.
You mentioned that usually they are conceived with a central platform or so, like the Bank of England, be it a blockchain or not. This creates issues of privacy because any transaction could be followed by the central bank. However, for example, the Bank of England says that's no problem because we will respect privacy.
Well, Christine Lagarde actually talked about this a few months ago, and even she recognized that it would not have the same anonymity as cash would have. And to let's say the minimum would be the same KYC and AML rules that commercial banks have. So basically that would imply a level of scrutiny on transactions that doesn't exist today with cash. But it would be even worse because every transaction would be tracked by the central bank in real time. So basically, they would have a, let's put it this way, massive financial surveillance, not necessarily nefarious, let's put it that way, but the problem is that it ultimately will depend on the regulator or bureaucrat in charge. So that's the real danger.
So you have to trust the regulator respecting the privacy.
Right.
Now, one issue is privacy, and another issue is financial stability, especially if the central bank is issuing retail CBDC, saying that everybody can get its own account at the central bank. That would allow me to switch from 1 second to the other in the extreme, from my bank account to the central bank, in case that I have any doubts about the security of my money at the bank. Are we not actually entering a period of extreme bank runs if we introduce this kind of system?
It raises, there are some ways that they could try to tackle this issue, but it raises serious questions about how commercial banks are going to sustain themselves with this type of money on the retail level. Because, I mean, they could charge fees, for example, for custody, for intermediated CBDCs. They would, for example, be in charge of handling transfers and stuff like that. But ultimately, that risk, what you just mentioned, exists, and it could put banks in a very difficult situation. For example, let's take the case of the last 2 months or so in the United States. People are afraid that their banks would fall and the FDIC would not be able to cover everything that they have in their account. So
the rational thing would be to switch to the Fed CBDC.
Absolutely, right.
Even in case where you have no bank run, probably the funding costs of traditional commercial banks would rise, wouldn't it?
Absolutely, yes, right.
Now there are also positive aspects of, say, CBDCs or in general digital money, in the sense that you could connect it with smart contracts, etc. Do you see their chances, or is it rather a threat?
Well, I see that the dangers outweigh the advantages of this system, but of course there would be advantages to CBDCs in that respect. That means it would be more cost effective, it would have no intermediators to make transfers. You could do it. There are even projects for cross-border CBDCs. So basically, if you like to make a bank transfer abroad, you would have to resort to SWIFT wires or nothing of the sort. So there are advantages that could be used and are used by those who promote CBDCs, but the dangers are of another league. Let's put it that way. So clearly, I don't think it's advisable to create CBDCs.
In general, or just retail CBDC?
In general, because there are proposals, for example, by Paul Ryan in the United States, to use commercial. It's a two-tier system. Right, exactly. And they say, well, it will be something between the banks and the Fed, and not on a retail level. But the problem is that if you have a crisis, the government will do whatever it takes in order to, let's say, stimulate the economy or do helicopter money, which with CBDCs could be done on a scale we haven't seen ever.
At least with retail.
Absolutely. Mm-hmm. And they would increase, or let's put it that way, try to maintain the monopoly they hold on money facing a crisis. So it would be something beyond our capability of seeing what would be the consequences of implementing it.
Given that you're saying that CBDCs, the dangers of CBDC are really great, and we should try to prevent central banks from using CBDCs, and the future anyhow is digital. The alternative would be cryptocurrencies and traditional banking system currencies, stable coins, etc. One problem might be that consumers say that, well, I don't trust all these cryptocurrencies. We are not all educated in informatics and can look at algorithms or so. How to get out of this problem of lack of transparency and trust?
For cryptocurrencies.
For the cryptos to be a real alternative to central banks issuing their own CBDCs.
I think it's a great question. I do not have the answer, unfortunately, but I do believe that if you allow freedom and competition, eventually you would find, let's put it this way,
the market will solve it.
Let's say the market will try to solve it and will offer different alternatives that will suit different interests. Let's put it that way. And therefore, I think that...
How about official oversight?
Well,
in order to impose a certain corporate governance?
Well, but it would go against the nature of that, which is cryptocurrency. But in any case, there are certain ways that you could, for instance, let's take Bitcoin. Bitcoin has a strict monetary rule, which is, on the one hand, a very strict rule of law, and on the other, it gives Bitcoin a lack of flexibility in order to respond to demand fluctuations, which is why the price is so volatile.
So volatile.
So that's why I think Bitcoin is not a good money, or is not money at all. It's another type of asset with its own advantages. But I think the question of what would be or what would let's say work as a good money is still an unanswered question.
And you don't think, given that you have your own cryptocurrency, you don't think that that there is need for some consumer protection in the traditional sense?
I think that with decentralization and cryptocurrencies being designed as self-adjustable, let's put it in that way, people could have an idea on how it would be predictable because of the nature of the cryptocurrency. So for instance, Bitcoin, you know how it will operate. And that is why you know the disadvantages of Bitcoin. It's inflexibility. But at the same time, it's got a lot of good qualities that which are basically the spirit behind it, and why people try to use Bitcoin. Just to use one, but you have others like Ethereum and well, but there is no magic ultimately.
And to end our discussion, I mean, there are cryptocurrencies proper with their own algorithms where you sometimes wonder what actually is behind, and then you have stable coins that basically are a peg to traditional fiat currencies. The future is for whom?
I think for both. Stable coins will basically they fulfill the role of providing liquidity to cryptocurrency markets when commercial banks are not allowing ramp off and on of fiat to the crypto industry. So they work for that purpose. And cryptocurrencies will likely be used for different purposes. Internet of Things, smart contracts, the insurance industry. I mean, there are many different possible applications of crypto that not necessarily deal exclusively with money. So
the future is innovative and hopefully full of competition. Then the market will manage to solve this problem. Thanks a lot.
Thank you very much.
Thanks.